Welcome back to the Daily Drop. Okay, NFTs. Everybody's talking about NFTs. Let's start at the beginning. Can you define an NFT for our audience in simple terms?
Yeah, so let's start with this concept of non-fungible. Non-fungibility, non-fungible tokens. The concept of non-fungibility is something that most people are actually very common with and probably experience every day. Non-fungibility is the idea that a piece of data is completely unique and one asset can't necessarily be swapped to another asset. That could be a Burqa bag, it could be a digital identity, it could be a domain name, it could be a medical record, etc. Those are all non-fungible types of information and data. Fungible, on the other hand, would be like you have a dollar, I have a dollar, we swap it, we don't necessarily care. A dollar's a dollar. So if you go back to this idea of non-fungibility and where NFTs come into play, how can we take that same amount of unique data or that unique information and almost represent it on a token, on a blockchain, such that it can be transferred in a completely peer-to-peer fashion. So it's really representing the digital ownership and ease of digital transfer of those unique pieces of data.
I mean, look, that's a great explanation. And I mean, a lot of people were researching NFTs this year because it was a huge year. But I will say, while 2022, has also been like a difficult year for the entire world's economy, including the NFT industry. So I guess that's a question I have, right? Like, how correlated is this sort of new NFT market to the broader macroeconomic environment?
Yeah. So looking historically speaking, over the last cycle, we've obviously seen a heavy amount of correlation between NFTs and broader risk assets. Specifically speaking, we've been in an era of zero to negative real rates. There's been a tremendous amount of cheap speculation. It's been very easy to go out and speculate on a lot of high growth assets, which might derive some sort of future utility, some sort of future value, some sort of future cash flow far off into the distance. And we can speculate and pay high premiums on that today. So clearly, risky assets at the right end of the risk curve, like crypto, and even more obviously risky than that, NFTs in particular, have enjoyed a lot of that speculation and obviously moved in lockstep with a lot of the other kind of risk-on assets over the last cycle. Right now, we're seeing an unwind of that in respect, but my whole thought process is in the future, just because these assets have behaved as tightly correlated assets in the past does not mean that they're going to continue to do so. We're obviously in a nascent stage of these emerging assets, and over the next 3, 4, 5 years, we're going to see a much more broader decoupling of that overall correlation itself. And we'll start to see a little more of prudent price discovery. It'll be easier to make more sense of, if I own this NFT and there's...
Let's pause for 1 second, because I have a whole section on the future and the technology, and I think that you're starting to go there. I can't wait. I want to just have a bit more of a baseline just for our audience before we get there. Let's talk a little bit about utility. You brought up utility, and look, the NFT market is new, but you can kind of break it into segments where now you really have seen a deliberate shift in philosophy. Utility is now at the center, pretty much NFT conversation. Why is that?
Well, utility is really at the center of most conversations around cryptocurrency. You obviously have Bitcoin, which can be used or looked upon as a store of value, as digital energy or digital gold. But then you have basically a vast amount of utility tokens that exist in the market: Ethereum, Solana, Polygon, whatever it might be. And these are underlying tokens that actually represent access to scarce resources powered by these different ecosystems that I mentioned. And ownership or acquisition of those tokens should equate to direct utility and utilization of those resources or value that those networks provide. The same goes hand in hand with an NFT itself. So an NFT directly, right? You could look at an NFT and say, I want to own this rare piece of digital art. And as a collector or creator, this is a tremendous piece of technology. I can now basically operate directly and freely without the need for centralized auction houses or galleries, which might be rent-seeking and very value extractive. And the utility might be derived directly from the collector in terms of their appreciation for the creator's piece. On the flip side, however, as NFTs are evolving, we're seeing more utility use cases emerge, We saw it firsthand with Bored Ape Yacht
Let's pause a little bit, 'cause we're going to go to the break, but I definitely want to talk about the evolution of NFTs when we come back on the Daily Job.